All right, everything looking good. We are live. Let's go ahead and get this TA party started. What's up, Hex Evolve? Good to see you, brother. Welcome back to the channel, Crypto Trend Trader, with our Friday morning market wrap up. It is 11 a.m. Eastern Standard Time on 12/2/2022. And as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, let's go ahead and jump right in. So we did see got a little fresh data action. Unemployment rate came in today. Actual was 3.7%, forecast 3.7, previous 3.7, no change, obviously. Non-farm payrolls as well. Actual came in at 263. The forecast was 200. The previous was 284. So substantially higher than expected. Not like crazy though, obviously still trending down slowly but surely. What's up, Sohil? Good to see you, brother. Yeah, that's right. Let's go, baby. Let's go. All right. So obviously we could see basically what's been happening over the last few, I mean, at this point in time, it's been weeks, but essentially the weakness we have seen in the DXY, the weakness we have seen in the TNX has translated for everything but cryptocurrency. It's even helped crypto a little bit, but we have basically seen gold, risk on assets across the board, essentially strengthening because of that weakness. So we know obviously that as the DXY and TNX let off, as they come down, as they see the pressure kind of relief valve going into full effect, we know that allows the asset classes to rally. Now, the real question is now, what we're seeing happen in real time is all these assets that are rallying off of the weakness in DXY and TNX are now reaching key resistances. In many cases, like Dow Jones too, we're very close to confirming, macro bull market trends and being at all-time highs. Now, the issue is TNX and DXY are basically at support at the same time. So either DXY and TNX are just going to drop straight through support, no worries, just continue on lower and just go straight down, which just about never happens with any asset class. They never go straight up or straight down. Or they're getting ready for that relief rally, kind of reversal. Now, could they reverse temporarily and then go lower? 100% for sure. We should definitely count on that as a possibility. Most important thing we have been talking about, though, is things are not as cut and dry as they were earlier in the year. As essentially what we've seen is now that asset prices in the United States have come down so much, stock market has come down so much in many cases. Now, granted, a lot of stuff has already rallied back to those levels, namely the Dow, a couple things making all-time highs, but even energy down substantially from the highs. So the real question is now, if everything is cheap, cheaper than it's been for a while, and you're looking for something to buy, USA starts looking pretty good. But if you're in the USA, the dollar doesn't matter because obviously you're just going to buy goods with dollars, which is what you already have. So that's not an issue. But if you're outside the USA, the dollar has been strong, for over a year. I mean, like coming on realistically, it's been a few years, but the last year has seen, an insane rise in the DXY. So now suddenly, if the DXY is weak while the stock market is down, all of a sudden the appeal of the United States market to international buyers goes through the roof because they're basically getting the best of both worlds. They get cheap assets and a good exchange rate. That's amazing. So that could legitimately be what actually propels, some of or all the major indices to new all-time highs. And we should definitely keep that in mind as a possibility. Now, at any point in time, obviously, that could change. Assets could, start going up. Well, a lot of them already have, or the dollar could start strengthening again. So looking at TNX, obviously the key area to watch was that previous low right here. We took out that low. We obviously have our fib right here. We saw clear support and resistance at the 236 from our recent swing low on beginning of August here. And now here we are coming down to the 382, and we're seeing an initial bounce back to retest the support that we broke down from. We do have a slight gap back up to 3.69. Obviously, whatever the market heard from Powell, the decrease in the rate of rate hikes or the acceleration. I mean, however you want to call it. We're decelerating the rate at which the Fed increases rates. So, if you told me any time in the past history ever in all of existence that the Fed had just hiked a bunch of times 75 points and now they're only going to hike 50, and then you ask me how's the market going to react to that, I get why there would be an initial bounce off of that or an initial, hopium kind of trade. But we have to understand that this is not good news for the market. This is not good news for literally anything. If, in fact, the Fed is going to pivot or whatever, that's probably not a good thing. Short term, sure, it might be. But so looking at TNX right here at key support, holding on for now. We see obviously pretty beat down inside the bearish control zone. The gap between the stochastics is tightening pretty quick here. We are consistently putting in new lows, at least this last one. So no divergence or anything like that. It is important to note that the knife is back on top of both the stochastics, which is our first indication that, we're potentially going to be moving back to the upside. Now, obviously, we're in a bull trend. So the best times to buy, looking at this right here, TNX been in a bull market for quite some time now. So the absolute best times to buy was, well, when we see this green highlighted area right here, which is, basically the bearish control zone. So here was the best time to buy the bottom. And then we saw here again, best time to buy the bottom. And now here again, obviously this one is extended. Maybe this is not going to be a buying opportunity, but as long as we're above the 200 exponential and simple, there's a lot of people out there, including bots, algos, market makers, that are going to be buying support. So is that going to be the 382 support, the 0.5 support, the 618 support, the 200 moving averages? I mean, we don't know exactly where people are going to step in. They're going to step in along the way. And then eventually when more buyers step in than sellers, we'll see a nice bounce. We don't know exactly when that's going to be, but this is a key area to watch. And then just flipping over real quick, and we'll take a look at the DXY, because obviously, this is really what we're paying attention to. DXY on the daily is now below the 200 exponential and simple. So the truth is we have lost key support. So we bounced support. Basically nothing happened at all. And then we broke through it. This does happen fairly often on the retest of a 200 or 200s. But the truth is, when this typically happens, after we break down through here and everyone gets bearish and says we lost the 200s, then we'll get that short squeeze, that rally back up to put in a lower high. So if we assume that the dollar has topped, macro top is in, that's it, we're going lower from here, for sure, 100%. It's very important, theoretically, obviously, it's very important that we recognize that even if we are headed much, much lower and the dollar is going to melt down and go to zero, and all the people that hate the dollar or think the USA is mean or things are unfair or we have too much freedom for our own good, all those people, they could be right eventually. But we're not just going to come down here and then be like, oh, we lost the 200s and then just go straight down after that. It's just not going to happen. So we might see further push to the downside, but full on expect a massive short squeeze back up to like that 110 area or something like that. So obviously this was our target area for the retracement, 200 exponential and simple. And then we slightly violate that level. We back test it and we're just hanging out at the lows. But right now, there's no fear in the markets. There's no reason the dollar should be strong right now. There's no reason stocks should be selling off right now. We can just rally forever, right? Well, we got to be careful. If we start to keep putting in lower lows right here, 1, 2, 3 lower lows, if this starts to pivot back to the upside and then we see multiple green histograms, multiple green histograms, multiple green histograms, we're going to have our third drive of bullish divergence. Consistently lower lows in line with higher lows on our indicator oscillators. And we know what that means. Probably a powerful squeeze back to the upside. So if we just assume, again, the same way we assume this is potentially going to be the bottom, obviously we don't know that yet. So let's just assume this is potentially going to be the bottom. Obviously, we don't know that yet. But, we would expect a bounce back up to like the 0.5, which just so happens to line up pretty clearly here. Possibly the 618, depending on how bullish it is. Maybe new all-time highs. We don't know. Or cycle highs. So 109.48, aka 110, seems likely. If we do continue the sell-off, even if it just takes some time, even if we bounce before then, whatever happens, regardless, we have some key levels to watch. Very, very strong support right around that like 9,800 range. I don't think we're going to get there anytime soon. This has been selling off pretty aggressively, and markets have rallied pretty aggressively. We talked about the timing going into this rally and talked about how I could see a 2-month rally, but it's probably not going to last till the end of the year, because if we see a 3-month rally, which is roughly, what we'd be looking at if this rally's till December, till the end of the year, we're talking about new all-time highs on basically, at least the Dow Jones, if not all the major market indexes. So oil, we put in a slightly lower low based on the wick, but we did hold the channel support as we discussed. As long as we're holding support, as long as we're getting rejected by resistance, we're just range bound. So the same way we were range bound at 76, we poke down here. Everyone thinks we're going to break and just melt down and oil's going to go to zero. Nope. We get bought back up, push back up here. We'll see what happens on Monday. OPEC is doing their best to try to control the oil prices. Obviously, so far it's not working. Because think about it. OPEC's like, oh, we're going to cut supply. We're not making any more supply. We're going to cut. You guys are manipulating the oil prices. We're going to cut. We're cutting supply. But the oil price keeps going down. So OPEC is either bluffing, they're cutting fictional supply that doesn't even exist, or they don't have any power. They obviously have some kind of power, but whatever they've been doing, talking about cutting supply and everything, it hasn't been working yet. And it looks like we just flipped into a bearish, bear market. So I would just expect continuation of the downside. I'm still looking for oil in probably the 60s or something like that. So over time. Also VIX, again, we're seeing volatility back down here at the lows. We talked about this level right here. If we close below this yellow line right here, we then have, basically a high, a low. We have a lower high through here. Not really from this one. I don't know. It's kind of a weird situation. Technically, we should be looking at this as the high. So we kind of have a high right here, then a low, then a lower high, and then arguably we're getting ready to put in a lower low. Technically, looks like a topping pattern. The same way it was, bearish the whole way down here. It was bullish up here as we were putting in higher highs and higher lows. Now we're arguably putting in lower highs and lower lows. So do we go much lower from here? The truth is, at under 20, the VIX looks like, an amazing play right now. Now, maybe volatility is just gone, and nobody needs downside protection, 30 days out on the S&P. That is a possibility. We have talked about, the short-term options trades and people putting on like short-term, basically like bets, within the week or whatever, as opposed to, longer term hedges, which is essentially something that would be measured by the VIX. So, is this thing just done as being a useful indicator? Or does it just appear like at the time? This thing has melted down from 35 down here to sub 20. So, again, at some pretty key support levels, I would expect this area to hold. If we don't hold and this drops down, I would fully expect just a raging bull market. Just macro highs on everything across the board, no matter what it is. Complete trash. FTT token to the moon. Okay. If this is really happening right now, if we're really about to just start another melt up, but I'm just not sure that's the case. So while I am going to trust in what we're seeing from the indicator oscillators, on the Dow Jones, 200 exponential back above the 200 simple, about to flip bullish again, took out the previous high right here. That's key, important stuff. We're pretty exhausted up here at the top of the range. Doesn't look like we could really go far from here. But if we just consolidate for a little bit and the indicator oscillators cool off a little, we probably rage. Now, we do have to be careful because we have 1 drive, 2 drive, 3 drives of bearish divergence right here. The same way we were basically setting up for 3 drives of bullish divergence on the DXY. So if you ask me right now and you're like, okay, you basically called out double bottom scenario, triple bottom in some assets, bullish divergence, a back test of the 200 exponential and simple. Sure, we got ahead of all that stuff. And then once we broke above the 200 exponential and simple, that's when we started getting, skeptical, but, ambitiously optimistic. So the real question is now, was this enough to fake everybody out? And now we're about to melt back down into the bear market? Or, are we just going to go up here these last couple percent and just smash the all-time high? We just got up here within 7% of the all-time high on the Dow Jones. 7% of the all-time high on the Dow Jones. go ahead, say it out loud and see if that sounds insane to you. So we went from down, from the all-time high, 22% on the year, basically around 20%, because that was basically January, beginning of January. And we're right back here at the highs again. Does that make sense? Well, we looked at the individual stocks that make up the, top 10 stocks in the Dow Jones, obviously 50% of the index. We looked at them and some of them are at all-time highs. So sure, it definitely makes sense. And with the weight and everything of those 10 stocks, there's definitely some potential there. So let's look at our longer time frames and take a look at what's happening. New high on the weekly from that previous swing right here. Looks like continuation. Blue slope line, bunch of histograms above the zero line, hard buy signal. I mean, it looks good. Looks like we're headed back up here to test more resistance on the weekly. Monthly, lost the 821, bear cross, massive bullish candle coming in right here. I mean, V bottom, back to retest the highs. Sure looks like it. Couple green histograms. We're still below the slope line. The slope line is red. Stochastics are trying to turn back up to the upside. Knife is above the blue stochastic, finding resistance at the pink stochastic. I mean, if you told me like by the end of the year Dow Jones hit all-time highs, I wouldn't even be surprised at all. If you told me that this was just a fake out and we just melted straight back down and went to new lows, probably not by end of year, but over next year, also would not be surprised. So, at this point in time, we can trust what the indicator oscillators are telling us. We can trust our feelings or whatever, or just sit on the sidelines. We do whatever we want. I think the best thing to do, honestly, is to trust the system and then just be cautiously optimistic. So we look at the other major indices and they are not painting the same picture at all. S&P, another lower high right here. Now we're not topping out yet. We're at resistance, whatever. Dow Jones already has taken that out. So, basically S&P would have to rally another 10% just to look how the Dow Jones looks. So that is sort of strange how underperforming all the rest of these asset classes are. We see a lower high right here. We see a higher high right here. So bearish divergence building. Potentially. Weekly, series of lower highs and lower lows. We need to get all the way back up here above like 427 to even invalidate what's going on here. We are very close to 821 bull cross. It failed right here. It failed right here. Is it going to fail right here? We'll have to wait and see, obviously. We had that massive bullish divergence. It has played out very nicely on all these assets. Right as everybody was saying that everything was going to go to zero. And it's like, sure it might, but monthly back above the 821, close back above it, in line to cross the 821 back to the upside. So again, I mean, we can either trust the system or we can just stick to our guns and just believe whatever we think should happen. Triple Qs, very, very weak in comparison. Much, much weaker in comparison. IWM, pretty weak in comparison. Not nearly as bad. This looks a lot like the S&P. We obviously did not put in a new low right here, so we have a double bottom. We had that bullish divergence. Push back up to resistance. Stalling out for now. Potential to print some bearish divergence. XLE looks like it's rolling over. Energy ready to have that broader pullback, at least to start testing some of these levels, including the 200s. I was messing around with some stuff on here. And I wanted to pull it up real quick so you guys can be part of my messing around. So we talked quite a bit about, what happens when energy tops and how does that like translate out to like the end of the cycle, etc. So I have US oil right here in the light blue, and then we have gold in dark blue. So we can see, oil and gold trading pretty close together here. Obviously a little divergence there. Gold breaks up, oil breaks down, and then they kind of come back in line here. And then we see, again, they start trading in tandem again. For the most part, we see like a spike in oil right here. We don't really see a big spike in gold. We see a trough in oil, much more than a trough in gold. And then again, just back to just basically trading, I would say pretty similar. Definitely a correlation between them, a pretty decent correlation between them. with the occasional like little divergence. So let's look back here again at what we were talking about from like 69. Shout out to Elon. So if we look right here, basically when the Dow Jones topped at resistance right here, which is what our big orange thing is, when the Dow Jones topped at resistance and then came down, you know, basically found support or at the lows or whatever, we're looking for how that corresponds with our indicator. So when the indicator slope flips to red, or when we see the peak on our actual like green, that's basically, you know, corresponding with the top of the inflation or the bottom in the Dow Jones in, you know, 1 time, 2 times, 3 times. And then the green is the opposite. That's our bottom basically. Wait, what did I say? Red. Yeah, the green, sorry, is the top here in the Dow Jones, top here in the Dow Jones, and then we continue on. And then what do we see with the green here as well that corresponds to actually like oil and gold? You know, again, we can see the peak in inflation lines up pretty clearly with the peak in gold. You know, the red and the blue line up right here. And then we see again, the peak in inflation lines up with the peak in gold pretty clearly right here. And we see also, you know, when we look at oil, you know, it peaks around the same time as well. Peaks here again around the same time as we see a peak in the indicator. So now let's look, you know, as we continue to go, we see this consistently over time. Now the Dow Jones, we don't have as clear of, you know, a correlation between inflation or not. Sometimes Dow Jones goes up during inflation, which makes sense. Sometimes it kind of just flounders. But here we see inflation has peaked again, at least for now. So far, we see a peak in inflation. The slope line has flipped over blue. We're trending back down. So what does that correspond with? Obviously, we know when that tops out, you know, that's our peak in oil. That's our peak in gold. So, you know, gold kind of put in like a little double top right here, appears to have peaked. Oil came in and put in a massive spike top right here, you know, appears to have peaked. So did inflation also peak as well? Yeah, I mean, it looks like it, at least for now. So I think the best thing to do going into the future is assuming that inflation has peaked. Does not mean we're not going to see consistent, ridiculously high inflation over the next 2, 3, 5 years. But it does look like inflation has peaked for now, according to the newest indicator that is available to absolutely fucking no one so far. Soon though, will be. So let's take a look at Tesla. Obviously broke down from key support, push back up here, trying to move to the upside. Again, we see some bullish divergence taking place right here. You know, was that the move already played out? Hard buy signal coming out of the bearish control zone. Obviously a lot of uncertainties with Elon. All we did was bounce the blue 236. The target is the green 236, about 210. Are we going to get there? We should. So Microsoft had a nice move up there, conveniently just tagged the descending resistance. Didn't quite get to the 200s, didn't quite get to our target yet, but still a really nice trade, still in play there for now. Apple, another just dead cat bounce off of support. It is a higher low for now, kind of just floundering here. Again, consistently lower highs. Did not put in a lower low right here, so worth paying attention to that. You know, obviously we have like an ascending support for now, so that's worth paying attention to. I do expect Apple to go lower. Again, short setup still in play. Google, so we bounced off the 0.5 and back tested the 382. We're holding there for now. Still well off of the 200 exponential and simple. Building some momentum to the upside. We saw a pretty big surge in tech. It gave back a little bit of it over the last couple of days. But, I mean, let's be real. We know exactly what that surge was. We know exactly what it was. Tech is just beat down as fuck, and people are off sides. And if the Fed really is going to pivot, and the bottom is in on the stock market, and that's it, inflation's done, Fed's pivoting, everything's good again, quick, hurry up and buy your trashy tech stocks. Hurry, 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 hurry. Everybody buy them quick. We're all on the wrong side of the trade. Same way we saw that with energy. Now, do we see follow through on this, or is it just a dead cat bounce? We'll have to wait and see. You guys know how I feel, obviously. Again, Meta, people just offsides on Meta at $90, and now it's at 122, 100%. I mean, this was a disgusting gap down from this level, and all we're doing is trying to close the gap. Not seeing any constructive, nothing really constructive in tech. Amazon looks terrible right now. I don't know why it looks so much worse, but you know, everything looks like it's ready to roll back over and go down. I mean, the Dow Jones is literally the outlier right now. It is the one and only thing that looks different from everything else. Hexaval says, I have a question about the Fed. They are letting the balance run off currently. I've heard this will lead to higher rates. I mean, sort of. If you think about it, like, okay, first off, it's a weird situation because the Fed is setting the Fed funds rate. So that's something that they just basically like put in a floor on, essentially. Because basically what they're doing is setting the overnight rate. And theoretically, if you can earn, let's say 4% overnight, and you can just re-put that money in every night for a year, you would earn the 4 total percent at the end of the year, versus just like locking in a 1 year, like short term, you know, at that same rate or whatever. So you're not going to lock in for lower than that because you can just give your money to the Fed instead, you know, if you're a bank, obviously, with, well, not just any bank, but regardless. So they're basically putting in a floor. But we're obviously seeing like yield curve inversion taking place on the longer time frames, signaling that the market does not believe that we're going to have this level of inflation going into the future. Therefore, they're not going to adjust long-term rates going into the future, because this is what would happen. Okay, if you have 4% interest rate or something like that, or 5 or 6%, at some point in time, finally people just say, F it, I'm going to just lock in for the next 10 years or 20 years or 30 years at this rate. And I don't need to take risk anymore. I'll just sit in these bonds. I have no interest in trading them. I don't care if they fluctuate up or down. I know at the end of this 10 or 20 or 30 year period, I get back all my principal, plus I get all the interest payments along the way, all the coupons. So who cares? Doesn't matter if rates go up more. It doesn't matter if bonds go down or up, or it doesn't matter, because at the end, you still get your money back 100% regardless of what fluctuations took place. So that being said, the fluctuations that take place is what you're talking about. You're talking about if the Fed is selling into the market because there's more bonds for sale, it would drive up the yield because it drives down the price of those bonds on the secondary markets. And that is true in many ways. But again, the distinction with bonds that's so important is if you just straight up buy a bond and lock it in, you get back your money no matter what. It doesn't matter the fluctuations. The fluctuations are just the market repricing existing bonds. So when the price of the bond falls and the yield goes up, it's because the actual yield in the market, like if you bought a bond and you were locked in at 2% and then suddenly bonds are paying 5% and you're like, oh great, I'm locked in for the next 30 years at 2% and I could be locked in for 30 years at 5%. So you have the choice to either just say, man, that was stupid, or you can sell your existing bond, take a hit on that, and then get a new bond. So that's what drives down the actual prices of bonds, which is what drives up the yield, because the actual yield doesn't change. It's just the yield in relation to your paying price. If I pay $100 for a bond and it's 2% yield, you know, I get 100 plus $2 at the end of the, you know, time frame. So let's say it's 1 year and 2% bond, I get my 100 back, I make my 2. Now, what if suddenly bond rates switch to that 5%, let's say? You know, I would lock in $100, I would get the extra 5 at the end of the year. So now suddenly you say, well, a current bond is 102, or I'm sorry, the old bond is 102, you know, total price, total value, whatever. And the new bonds are 105. So I'll just sell my 102 bond. I'll take a $3 hit on it because I have to make up for the extra couple dollars that somebody's going to be getting off a new bond. And then I'll get out of that trade. And then I can buy one of the new bonds, or I can hold out because I think rates are going to keep going up, etc. So there's a lot more dynamics in play than just like the Fed selling into the market. Because also, when the Fed is selling off this paper, they're not actually selling paper. Like when they're letting the balance sheet run off, they're not going into the bond market and selling paper. I mean, they can, but that's not what they're doing. They're just letting it, quote unquote, run off, which all that means is, you know, if you have a portfolio that you've been building over 10 years or 20 years or 30 years, you're going to have different assets inside that portfolio, different bonds that are going to mature at different times. So if you're regularly buying bonds, you know, once or twice a month, like the Fed does, those bonds are going to mature at different times. Some of their paper is 3 months. Some of it is, a little longer, a couple years, whatever. Most of their stuff is like shorter dated paper though. So as those things roll off, essentially what they're doing is just not buying new bonds. So if I have a bond and it's locked in for 1 year, when that bond matures, the bond basically I return it. It gets torn up and it's gone. The contract is over. I get back my principal. I've gotten all my interest and that's it. It's gone forever. But nobody actually buys that bond. It goes back to the Federal Reserve. So arguably you could say they're buying it back from me, but really they're just completing their part of the contract. So the Fed is not into the market. All that's happening is bonds are maturing. Therefore, now they have less on their balance sheet. So they have the option now to either replace those bonds with new bonds or not. So if they don't replace them, they're not actually selling into the market. Therefore, they're not actually driving down demand. Therefore, they're not actually driving up the yield. But what's actually happening is that demand is decreasing because the Fed is saying, oh, this just matured. And instead of buying a new one to replace it with and keep my balance sheet the same, I'm just going to let it run off and it's gone forever and the balance sheet is lower. So by the Fed not buying a new bond, there's technically less demand. And if there's less demand, then arguably it's the same as if there was more supply. So the dynamic isn't necessarily different, but it's going to translate different in the actual market, how the data shows up. Because instead of seeing, like you said, the bond prices go down and the yields go up, we just see less buyers, possibly even, no buyers. So it's much more complicated than people realize. And most of the time when people are explaining it, they don't actually know what they're talking about. They're just repeating what someone else said. But the dynamics are very, very complicated on that. So it's very hard to just sit there and say, if they're letting the balance sheet run off, will this lead to higher rates? No, not necessarily. Arguably, the little pressure on the scale might give you that impression, but not necessarily. So hopefully that made sense. So gold, obviously we saw gold relief rally backtesting the 200s, made it up to the 200 exponential. The target has and always will be, oh look, exactly where we just made it to. Congratulations, we did it. We hit our target to the literal fucking penny. And what happened? Well, we stopped as soon as we got there. So obviously other people looking at the same thing. 200 simple and the top of our previous cycle. So is that it? Well, we know as long as we have a clear support and a clear resistance, we know we're range bound. So most likely thing is we just chop around inside this range. So 1800 was the target. We did it. We made it to the target. So are we going to go back down to 1622? Probably. Are we going to print bearish divergence if this rolls over? Probably. Could we go higher from here and new all-time highs? Maybe. Anything's possible. I don't see, you could build a fundamental case for gold right now or whatever. But the fact of the matter is, we know based on history, based on the most awesome indicator ever created in the last month by me, which is the only indicator created in the last month by me. According to that, if inflation has topped and the correlation between gold and inflation is direct and very high, well, no way gold is going to new all-time highs, according to that. Starting to build some momentum though. Obviously, if you have enough of a dead cat bounce, it looks like you're building momentum and then all of a sudden you roll over. So that's what we really got to be careful of. This is what I'm paying attention to. Gold did get back on top of the 821. It is close to, basically crossing them back up. All it has to do is stay above that level. Looks much better than what happened right here. Obviously, we lost that level and just melted down. So are we going to reclaim this and just go to new all-time highs? Is gold going to go to new all-time highs alongside the Dow Jones? Is everything just going to go to new all-time highs? Maybe. I mean, it's worth paying attention to the fact that we have talked about the potential scenario of another melt up. As crazy as it sounds, I don't think we should rule it out. So silver again having a powerful day, broke back above the 200s, pushing back up here to $23. So we made it through our target. Obviously our target was $22.50. We're 50 cents above that. We hit the measure move. We hit the previous support level and Fibonacci's. Is there a possibility we come up here as high as like 25? Sure. It'd still be another in a series of lower highs and lower lows. When we look at the monthly though, silver got beat down pretty freaking bad here, all the way to the monthly 200 exponential and simple. So we would 100% expect to have support here. The knife is back on top. We are leaving the bearish control zone, and we're about to get an 821 cross back to the upside. So again, could this be a false signal? Could it fail? Could it roll back over? It definitely could, but it's worth paying attention to that, the macro picture. Here's the thing. Here's the thing about silver, okay? And the cult of silver. We don't really care what happens right here. I don't care if silver is at $18. I don't care if silver is at $27. Nobody gives a shit. Well, somebody does. Not me, though. I don't give a fuck if it's between $18 and $30. And I have a lot of silver, okay? But the truth is, if we break above this 30 level, we're probably going to 50. That I care about, because that's going to complete this macro, the most massive cup and handle in the existence of history, from 1980 peak to the 2011 peak. And then, obviously the trough right here, the little mini top. But could we easily just chop around here for a bit and then just break through here and then go up here and then retest this? Yeah. And if we go from 23 up to 30, that's going to be a big deal. Everybody's going to get super excited. But I don't really give a shit. What I care about is, do we break through 30? That's what really matters. Okay, if we break through 30, we're going to 50. That's it. We're going to 50. And if we get up to 50, sure, we'll probably top out for a little bit and chop off and sell back down. And we might not even come all the way back down to where we're at right now. But, that's just going to further fill out this cup and handle. And you guys know, if we break through this cup and handle, the measure move, it looks crazy right now, obviously, because of log scale and everything. But that's the 1.236. We're talking about $90 silver. So we're at $23 right now. And you're like, well, how can you not care if silver goes to $30? Well, because if silver goes to 30 and breaks through that, then it's going to 50. And if silver goes to 50 again, I don't think it's going to triple top again. It might temporarily, but in my opinion, silver's going to 90. And if silver goes to 90, we're probably going to go to the 1.618 on silver. So we're probably going to $238 on silver. And you're like, oh, that's just ridiculous. We'll never go to $238. That's the most insane thing I've ever heard in my life. Well, I don't know. What's the Dow Jones going to be at? $100,000? What's Bitcoin going to be at? $1 million? What's gold going to be at? $10,000? What's silver going to be at? $238. See, it doesn't sound that crazy when you put it into perspective with everything else potentially being a high. So again, my main point is that none of this little bullshit right here matters at all. None of this matters at all to me. All that matters is taking out $30, and that takes us to 50, and then taking out $50, and then we can talk about big target. Does that happen? No, probably not. Silver actually is probably going to go straight to zero. I heard that you can actually replace silver in most things, including like iPhones and electronics, with just regular dirt from in your front yard. So as soon as other people figure that out, probably not going to be good for silver as an asset class. That may or may not be true. I'm not sure. So silver juniors, not nearly as good. Backtesting the 382, backtesting the 200s. We talked about this potential setup taking us all the way back to the top of the range up here at like $15. We're already halfway through the trade, and it was what, 66%. So up like 30%, not bad. Gold's same way. Gold miners, that was juniors obviously. GSG still at the bottom of the channel. Doesn't look particularly good. Looks like it wants to go lower. Hanging out at the bottom of the channel. We do that long enough, it's probably going to break. And what does that tell us? Okay, commodities obviously not doing so great. Energy obviously not doing so great. So that would correspond with the breakdown we're expecting. LNG, liquefied natural gas, Cheniere, a lower high it looks like for now. I was expecting us to come up again and print more bearish divergence. May not actually. We'll see. It may not actually play out. It's already playing out on the stochastics. We have a much higher high right here than the previous swing, and we're already threatening this one as well. But when we look at the TDMACD, we're still well off of that. So we may see one print bearish divergence and the other doesn't. We'll have to see. We may push up here again, put in a new high, and then, switch. Then all of a sudden we're not showing bearish divergence on the stochastics, and we are on the TDMACD. I prefer both things to line up. Mosaic, our little fertilizer play right here, hanging out at support below the 200s. Doesn't look good. Same thing. We're just basically chopping around. Uranium stocks don't look good. URNM just hanging out below the 200s. I don't like this. There's no reason. Why can't we just get back above the 200s and hang out here? Like, obviously we're at 66 right now. Somebody come in and just buy it up to 72. And then we'll be back above the 200s and then we can go to the moon. Because if we don't, we're eventually going to just do what we've been doing. High, low, lower, high, lower, low. lower high. I mean, we're setting up for a lower low. So if you're in the uranium cult, if you're one of these people that dislikes my videos when I say something mean about uranium, or, you know, gives me a paragraph in the comments about how I'm stupid and I don't understand the future and how energy works, buy some more fucking uranium stocks and push the price up. And then I'll be like, oh, uranium's good. It's back on top of the 200s. They're flipping over blue again. We're probably going to new all-time highs. Do it. Do it. I'm waiting. I'll wait. Oh, you can't? You're not going to? You don't have any money left because you're already all in? Okay, then shut up and let's just see what happens. The uranium people have went from some of my favorite people to some of my least favorite people. The amount of cult mentality in these markets is absolutely insane. CCJ, same thing. This thing was strong forever. It's below the 200s now. You know, it doesn't look as bad, but I mean, do it. Buy it up. Buy it. Push the price up higher. Tilray, so we came down here, looked like we were about to get the bear cross, and then boom, Jay Powell came in, you know, came out on stage with a J in his ear. Old Jay had the J, repped it up at the Fed meeting, and, you know, basically, I think that was him signaling to the market, like, hey, you know what? It's time for us all to get high. New all-time highs from Jay Powell, straight from the horse's mouth. Backtesting the 200 again. Looks like we're coming up here to backtest the 200 exponential as well. Exponential is back on top of the simple. We know what that means. They cross over right here. We put in a new low. Now we're threatening them. If we get back on top of like $5, you guys know my target's up here at like 13. Obviously a couple steps along the way. Are pot stocks bottoming? Did they bottom already? Are they getting ready to bottom? Is this a giant descending triangle and they're going to go straight to zero if they lose this support? All those things may be yes. But right now we're still in this descending channel in white right here, and we're just at the top of the channel. We really just got to see more on this. I know everybody wants to get excited. If you're not already positioned, at least some in pot stocks, I don't know what you're waiting for. But, you know, is now the best time to buy into resistance? No, I would rather see them move further to the upside and then buy after they break through resistance and it holds the support, that SR flip. So Dow Jones, big players, UNH, obviously saw that big move up and then just gave it away. Gap down here again. That was all based on Jay Powell. You know, threatening highs right here, ascending triangle. Do we come all the way back down to the bottom and then push up to the top again? Eventually we're going to squeeze and either break down from here and it's going to get nasty, or new all-time highs. GS, Goldman Sachs, the sack of lack, the sack of tech. I mean, is it going to roll over right here? A bunch of red histograms, Stokes going to the downside, and we're just going sideways. I mean, this might be setting up for a bullish reset, so let's not get overly bearish on Goldman Sachs. Could it come down to like 356, lose 10%, find support, and then go higher? And we got a 1, we got a 2, we got a 3, we got a 4, hold support, and then a fifth wave up. Yeah, I can see that happening. We'll see what happens, obviously. You know, I don't want to make all these upside predictions because, you know, we're basically at the area where it's like, okay, are we going to top out or not? Here's the thing. That's going to look super jank because we push up so high and then we don't really like get a deep retrace at all. So it's probably not going to be like some clean 5-wave structure. Now, is it possible? Maybe. I don't know. That's probably not going to. That would be a 236 retrace. So I guess it's possible. This was like a freaking 786, 886 retrace followed by a 236. I guess everybody just really bullish. We flip back into a bull trend. It's possible. It's definitely possible. That probably takes us up to highs. Realistically, though, we probably have more of a leg back up, retest the highs, and then we can come down, get an actual retracement. And then this takes us to new all-time highs. See, that seems much more realistic. A 382 retrace seems much more realistic. Home Depot, I mean, it's at the level. It's confirming into a bull market. 200 exponential flipping bullish. 200 simple is basically flat. We've got this W, double bottom. The measure move is 27% from basically where we're at right now with a 7% stop loss. You know, almost 4-to-1 risk reward trade setup. I mean, if you're bullish, why not enter into a good trade setup that looks good instead of just FOMOing into something that's already moved a shitload? I mean, obviously, it's up to you. McDonald's still looks like trash. Confirmed the 821 breakdown, threatening the lows right here. Quite a bit of support to chew through. Jesus Christ. Is it the air show today or something? I mean, can you guys hear this stuff? Am I literally filming this from an aircraft carrier? Oh wait, are we at war right now? Is that it? I mean, it sure sounds like it. Do I live on a military base? So McDonald's not looking so hot, obviously. Amgen, came down here, pretty much closed the gap. Again, it's going sideways here. If it doesn't break down, it's going to look like a bullish reset. Probably retest 258 though. We'll see. I mean, who cares at this point in time? Let's just go back into a bull market where everybody can just buy whatever trash they want. Nobody has to work anymore, and it just goes to the moon. That sounds so much better. Guys, do you even want to have to do technical analysis, or could we just buy whatever the most speculative trash stock is and just, or crypto, and just make money? I think that's easier. Let's do that. Microsoft at resistance. We already talked about this. Trade setup still active. Visa at resistance. We don't have like a clear W double bottom or anything like that, but we have a clear resistance right here. If we break through the resistance, I mean, again, we're at the 618. So next target would be the 786, 233. I mean, and then at that point in time, it's like, just go to new all-time highs. Let's not even waste our time anymore. Let's just go. Like, who gives a shit, right? It's funny too because there's still so much money on the sides here, on the sidelines. So fucking much money. But there's only a couple things that are actually doing good. We just look at those. So it makes it seem like, oh, if some of that money comes in, everything will be at an all-time high. It's like, no, actually, just the good stuff will, and everything else will still look like shit. But I mean, people are going to jump in and buy all this stuff that's melted down, all the Kathy Wood stocks, all the FTT tokens. I heard that they're actually turning FTT into an NFT setup, and then you can use your NFT to enter into orgies. I don't know if that's true for sure, but I mean, there's some potential there. I know Sam's trying to really like pitch this thing as potential to save the day. I'm not 100% sure. I guess they're doing like a new exchange. It's going to take place in the metaverse, and you'll be able to like tag people that exchanged SCDs with you. There's a lot of stuff they're building on over there. There's definitely a possibility. Okay. So Honeywell, so we've been talking about this one at resistance, parabolic move up here. I mean, again, if these things just like look at how long it's been cooling down while it melted up. So either we're in the middle of a bullish reset and this thing's gonna go parabolic, or this melt up is about to be given back. Obviously, we don't know which one. TRB, new highs, looking thick and juicy. Blue sky breakout, like probably printing some pretty disgusting bearish divergence here. These markets look like they're getting ready to crash, guys. Let's be real. Deer threatening the highs here. Still got that massive gap right there. No bearish divergence or anything like that. Looks okay. Lululemon. So we talked about this trade setup right here. We want to see a deeper pullback right here, but I guess that was it. That 341. Target's previous all-time high though. You can do an internal retrace. Be careful of some. I mean, we got above the 618. Next target would be the 786, 422. Seems possible, probable. Kind of already got the pullback. Once we tag the 618, though, we should come back to at least a 0.5. I would think there'd be a better re-entry at 348 or new entry if somebody's not in them. So we got the move on UUP. We talked about this. This is a dollar speculative move right here. So it wasn't touching the 200s, and the DXY was down here just hanging out at the lows at the 200s already. So we got the gap down to the lows. That's what we want to see. We don't have the same like bullish divergence right here, but we needed to see this hit at least the 200s before we could get more uniformity in a potential bounce. Now, again, I'm not saying the dollar has to go higher. I'm not saying it will ever go higher. But it's worth paying attention to that a lot of stuff's at resistance and some stuff's at support as well. I'm going to take like a 2-second break here and then we'll keep going. All right. Let's look at some cryptos. So not seeing much life out of crypto. Obviously the meltdown pretty much killed it. I mean, think about if it wouldn't have been for scam bankman fraud and the orgy squad. I mean, crypto would literally be at new all-time highs right now. Maybe not literally. It would at least be at the 200 exponential and simple. Maybe like 23, 24,000. We haven't tested the 200 exponential or simple since March. So we're like 9 months, basically, almost, not quite, without testing them. So, we should have probably tested it here. It was too weak. Here, it was too weak. So, I mean, eventually, are we going up there to like 23K? I mean, we should. We're building momentum. Coming out of the bearish control zone, hard buy. Stoch's powerfully angled to the upside. All green histograms above the slope line. Approaching the zero line. Potential for a daily 821 bull cross. I mean, it should happen, right? We should at least get a test up to like 18.5 if there's any buyers left, if crypto's not complete trash. I mean, we're not, though. We're not, though. So far. So we're back on top of the slope line here. It is still red, but that's good. First green histogram since a little bounce off of it. Still in the bearish control zone. Knife on top. Below all the moving averages, though. That's not good on the weekly. I mean, monthly, we almost made it to our target. That's exactly what we're saying, too, is we're like, is that close enough? Like, are we really going to just sit here and, like, split hairs over this? The low was 15,479. And I've been calling for 14.8 since we were at, like, 70,000. So, like, I mean, is that splitting hairs? If we made it to 15.5 and I said we should get down to, like, 14.8 was my target. Is that splitting hairs? Like $600 after we melted down? 54,000 almost. Yeah, I would say that's probably splitting hairs. So did we already bottom? Is it possible? It is possible. Unfortunately, right now, the most important thing in my opinion is that on the monthly, we just put in the lowest low of the entire cycle. So we had this massive move up right here and consistently put in higher lows the whole time. And then we finally peaked right here. And we're just consistently putting in lower lows. So that's not good. I need to see at least one monthly candle that's not a new lower low. That's a start. That would be a nice start on a monthly for crypto. And you're like, oh, okay, well, that's pretty simple. Why didn't you just say that? Well, I did. Other people don't say stuff like that because they don't know. They make it up as they go. We have a pretty clear plan and we just follow that. And then it's easy because then we're like, oh man, should I FOMO buy right now? And it's like, well, no, obviously not at resistance. Look at the trade setup. Risk reward is terrible. Of course I don't want to buy right now. Well, that was easy. Ethereum on the daily looks slightly stronger, trying to cross this 821 bull cross. Already has a blue slope line, couple green histograms at the zero line. Left the bearish control zone, hard buy signal. Stoch's powerfully angled to the upside. Ethereum at a strong resistance. This was a strong support right here. We broke through it. We back tested it, rejected, retested the lows, found support, retested the highs, found resistance. So, again, we talk about all the time. They're like, you just said the same stuff over and over again. What do I need you for? My job is done. If you ever feel like when you're watching these streams, you're like, why do I even watch this fucking a-hole anymore? All he does is swear, make strange metaphors, and say the same shit over and over again. You just graduated. You graduated. And not even in a bad way. You did it. If you don't need me anymore, that's great. That literally means I have succeeded. Or I have failed, and you're just like, fuck this guy, he's dumb. But, I mean, I doubt that because, well, most of the time we're right. So if we're right all the time, and you don't need me anymore, you're good. You just graduated from the academy. Let me know. I'll send you a little a certificate because you're the man now. There's nothing wrong with that. If you figure out what I do, and you're like, you just do the same thing over and over again, I'm not learning anything anymore, and I'm spending too much time watching these streams, that is completely okay. And honestly, we can virtually high five because we did it. We did it together. You learned. I helped to provide some valuable information. And now you're better for it. And that makes me feel good. So virtual high five to all the people that just graduated. You're done. See yourself out. Ethereum on the daily, though, back testing resistance. As long as we're basically above, the 382 and the Macro, I mean, technically we should have another line right here because we didn't quite get to it. But, you know, essentially, as long as we are above our blue line right here and at, or, I mean, technically below the white line right here, but I mean, we're at it right now. You know, I would assume that we're just going to get rejected again and come back down to the bottom of the range. And we're just going to do, you know, the typical, ooh, look, we're squiggling around inside the range. And then you're like, how long is that going to go on for? I mean, indefinitely, right? Until it doesn't. Eventually we'll break out. And then once we break out, it's like, oh, we're no longer in the range. So now we can reevaluate. But in my opinion, we're still range bound. If we do break out right now and that's it, and we continue to the upside, 821 bull cross seems like a possibility. Probably just come up here to that next fib and retest the 200 simple. Eventually, maybe the 200 exponential as well. We'll see, obviously. Not currently in a position on Ethereum. Obviously, the short setup played out beautifully, literally from the 200s, like the absolute tippity top. And, you know, took some nice profits when we came back down and back tested the channel breakout. So now we're back inside that range. So we were stuck kind of in that range here. We broke out. We found support on the top of that range, lower high, broke back down in the range. And now we're just kind of chopping around. So I don't really have a bias right here. Honestly, we're still below the 200s on the daily, so I'm still bearish. But, I mean, I'm not super bearish on these assets anymore. I mean, most cryptos I am because they're trash, but like a couple decent ones. Although, I'm not going to lie, guys. I'm not a fan of Ethereum going to proof of stake. I'm not a fan, but it is what it is. So weekly Ethereum below the 200s, back testing for now. 200 exponential already flipped over bearish. 200 simple. We just really, really got to get above 1350. And if we do, we'll go straight to 1565. Weekly, we have the histogram above the slope line. Stokes are still trending down. We're still below all the moving averages, so not great. Monthly still looks bad, but not nearly as bad as Bitcoin. We don't have a new lowest low. That's good. I mean, we threatened it with that wick, but it got bought up. Bearish control zone, all red histograms, red slope line. We shall see, but Ethereum definitely looking a little better than Bitcoin. Total market cap looks, again, a little stronger than Bitcoin right here, actually. If we flip over to the weekly, which is really where I like to look at these things, again, it looks like Bitcoin. We broke down from key support we were holding. We're back testing it now, potentially as resistance. Bunch of green histograms back on top of the slope line. I mean, look, crypto markets are, here's the thing about crypto, okay? Sure, they're underperforming. Sure, they look like trash. Sure, they've been melting down all year. Sure, most of them are scams. Sure, the whole space is pretty much a giant Ponzi scheme with a tiny bit of utility. Sure, to all that. I totally agree. But regardless of how weak it is, it's so weak and it's been beat down for so long that we're actually like close to potentially like trying to get back into a bull market, or at least like a more bullish consolidation. I mean, it's still probably early, but Bitcoin dominance on the weekly, you know, at the lows, just completely melting down, still doing nothing. It's kind of just making up its mind. But as long as we're hanging out right here, it tells me like people are not afraid of altcoins or stable coins. They don't really care about Bitcoin. So we're probably not at a bottom. I think while people are still invested, quote unquote, in trash bag coins that are clear scams, probably not at the bottom. Probably. Bitcoin dominance, less stable coins. Again, just kind of chopping around. Well off the lows right here. So we know a bunch of people moved money out of stable coins. Or I'm sorry, a bunch of people moved money out of Bitcoin and trash coins, scam coins, altcoins. That's the one. Out of Bitcoin and altcoins, and is keeping more of them in stable coins. And that's the only difference between these two charts here. This is with everything included, and we're just hanging out at the lows. Nothing's different. So in order for this to look different, when we exclude stable coins, it basically just tells us that a higher percentage of money left shitcoins and went into stable coins than left Bitcoin and went into stable coins. And that's the real disparity right now. The real difference between these is basically just more people are hiding their digital crypto money in stable coins as opposed to in shitcoins. You know, does that continue? I mean, I don't know. We'll see. Cheese backtesting the 200s. It did lose the 200s after like a long time consolidating above them. Not cool. Seems very likely it's coming down to like 13. Wait a minute. Is that the magic number? It's coming down to 1,337 ten-thousandths of a penny, of a dollar. It's coming down to point leet. 0.1337 for all you fucking nerds out there who know what I'm talking about. So that's our target. 0.1337. The most elite sub-dollar target possible. Solana, I mean, momentum building to the upside. Price is not going anywhere. Stochastics have gone all the way from the bottom of the range to the top of the range. Price has gone nowhere. This looks like it's setting up for a bearish. Same way we had a bunch of like bullish stocks that look like they're creating a bullish reset as the indicator oscillators trend down and they go sideways after a parabolic move. This thing melted down almost to zero. It tried. It didn't quite get there. Down 66% in a couple of days. And now the indicator oscillators are trending up while it goes sideways. So the same way they were setting up for new all-time highs and, bullish, reset, this looks like setting up for new all-time lows and bearish reset. And probably just straight to zero. Chainlink got that bull cross 821 back to the upside, reclaimed the 200 simple, headed up to our target at the 200 exponential. Still looking for 850, but you guys know I said if we go to 850, we're going to 9. We might as well just go back to 910. If we retest this 1, 2, 3, a fourth time, I mean, if we retest this a fourth time, we'll be on top of both the 200 exponential and simple, and they'll both be either bullish or like flat. So that's probably the bottom. Or the most epic fake out of all time. Either one. But yeah, if Chainlink gets above like $9.20, it's going to look pretty juicy. Compared to something like Avalanche, where the 200's up here at like $27 and $19, and it's at $13. At the lows, below support, complete trash. Just looks terrible. Polkadot, just complete meltdown. Look at this parabolic move off the lows, though. Crushing. It's up like 12% almost. That's pretty amazing. 12% move. That basically reclaimed the entire down move, right? It's only down 89% now. It's not even down 90%, guys. This thing's basically at all-time highs, right? It was down 90.97. So let's just round it off. Let's say it was down 91%, which is not bad for a crypto. And now it's only down 89.87. So let's round it off. Let's say it went down 91% and then it bounced and now it's only down 90%. So just for perspective, it's not looking bad. It could be much, much lower. 1 whole percentage point lower. So that's a pretty epic bounce right there. Just for perspective, obviously. Pretty epic bounce. So you can understand why I'm not like, too excited about some of these cryptos and like shit coins. But that's great though. You guys know my line in the sand for when I'm like, this is a trash asset is once it's down 95%. 91% is okay. Okay. It's not great. You're not great if you lose 91%. If you were like, hey, I went to work today and I'm like, oh, that's great. How much money did you earn at your job? And you're like, $300. And you're like, oh, awesome. You're like, yeah, but I lost 90% of it on the way home. And you're like, oh, so you have $30 left? That's pretty shitty. But it could be worse. Could have lost 95% or the full 100. If you get robbed, they took all 300. Okay. That's worse. Is it still really shitty to lose 90%? Yeah, it is. But it's not 95. It didn't go down the full 100. So that's good. Matic, this thing again, staying one of the strongest, bounced to 200 simple. It is now flipped over bullish, retesting a 200 exponential. I'm not gonna just keep saying it over and over, guys, but if Matic starts closing above 92 cents, especially if it gets above like $1 or whatever, is it a new bull run? I guess, right? Just imagine being in one of these shit coins that went down 91%, let's say, and then bounced back up and it's only down 1% now, or being in something that bounced, 192%, or, at least to compare like apples to apples, went down 89%. So that's not bad. And then did it bounce back up to where it's only down now 88%? That would be right here. Oh, no. Oh, okay. This one actually bounced. So 89%, and then it went all the way up to where it was down 55% or 68%. See, this is so fucking much better. So fucking much better. I know everybody's like, well, I just want to buy the worst, trashiest asset that nobody wants at the lowest price. That way, when it bounces back, I'll be rich. Yeah, okay. Okay. So you could be the only person that buys Polkadot at the lows, and then nobody ever buys it, so it never gets back to the highs again. And then you end up like XRP in a cult where you're just like, oh, one day it'll do it. I love polka dots. And you're like, I only wear polka dotted clothes, polka dotted socks. I got a tattoo of a polka dot. Like, I'm all in on this shit, okay? And it's not a cult, all right? I just really like polka dots. I've always really liked polka dots, but, you know, it just one day it hit me. But you're not in a cult. You're just wearing all polka dot clothes and got polka dot tattoos, and you're all in on polka dots, but you're not in a cult. Okie dokie. Or just buy a good fucking asset. And you're like, Matic's trash, and you're just mean because you like Matic, and you probably have a huge position in Matic, and that's why you're pitching it, and you probably work for Matic, and your middle name is Matic, I heard. Yeah, I mean, just momentum. I'd just rather buy something on momentum. If other people are interested in it and other people are buying it, I'm like, oh yeah, I think I'll do that too. XRP, I mean, ascending support right here, so that's good. Trying to reclaim the 200. So it's, I mean, look, here's the thing. I don't say this often, but according to the technicals, XRP is actually better than Ethereum. Okay, according to the technicals, XRP is actually better than Bitcoin. Okay, according to the technicals, XRP is probably in the top like 5% of cryptos right now, based on the fact that it's at least above the 200 simple. Now, is XRP still complete trash and, garbage and a waste of money and one of the worst asset investment / speculations you could ever make in your entire life? Oh yeah, definitely. Definitely all that stuff. But it's above the 200 simple. Or it's at the 200 simple. So compared to the rest of cryptos, XRP not doing so bad. So keep it up, XRPnesses. Keep it up, cult members. You're like, my mom died and I liquidated all her assets and I spent them on XRP, so I put in the bottom. You're welcome. ADA, Cardano. So another strong bounce off the lows here. So, I mean, definitely not a cult at all. There's no way that this is a horrible, horrible cult that has completely blown up at all. I mean, because it was down 90.38%. So we're going to round that one to 90. Okay, we're going to give it the benefit of the doubt. All right, so we're going to call it 90. And now it's only down 89.75. Okay, so, all right. So we'll round this one up, even though it's not really accurate. So we're going to round from 90.38% down. We're going to call that 91% down. That way, when we look at the bounce, we could say, okay, well, it's bounced back up to 90. So it's technically not down by 1%. And you're like, well, that, again, let's be realistic here. How much did we actually bounce off the lows? Eek. 5.75%? 5.75%? Is Cardano the worst crypto in existence that we looked at today? I mean, there's two top contenders, and Cardano's one of them, okay? And you're like, well, the only reason Cardano hasn't bounced yet is because we're loading up. And then once we all filled our bags up and then we're ready, then we could go to the moon. And you just don't get it. So like any day now, Cardano's probably getting ready to just be like straight up in a single candle, straight back to the moon. Any day now. We're just filling up our bags before we go. We're just filling them up, okay? So get ready, all right? I mean, or just have fun saying poor. I mean, just that move right there, 655%. So, I mean, have fun staying poor if you don't go all in on Cardano. Obviously, I'm being sarcastic. BNB, USD. Again, just chopping around between the 200s. One of the stronger cryptos for sure. Obviously, resistance at the 200 exponential. You know, support should act as support at the 200 simple. This thing is looking at some serious danger zone, though. Because we had this head and shoulders right here. And then we broke down. and obviously hit the measure move, overshot it, and then we bounced back up, retested as resistance, put in a higher low, retested as resistance, got through it, and then got rejected again. That was the 0.5. Wicked up pretty high here. That was obviously the implosion when we found out CZ was not going to be buying FTX. If you buy FTX, does... Never mind, I'm not going to say that. It's too mean. It's too mean. Just know that the stuff that I don't say compared to the stuff I do say has got to be pretty bad. So I won't say it. But anyway, and I do feel bad for all the people that lost in FTX because obviously they did not realize they were being lied to. But also, if somebody promises you 20% returns, you're probably a fucking moron if you believe it. Like, no offense. But you already know that now. You just didn't know it before you lost all your money. Now you know. So like that Andrew Ross Sorkin interview, he's like reading off this person's thing about they got like scammed by Scam Bankman-Fried and he stole all their money or whatever. And you hear like Sam's response to it. It's really not funny because the dude like scammed people out of all their money and lost it. And they didn't realize the actual risk that was being taken. So I fully acknowledge all that. But you have to think, okay, if you do dumb shit's going to happen to you, okay? That would be like me getting hit by a car and then I'm at the hospital and the cops are talking to the guy who hit me with this car. And then the guy's like, yeah, I hit him with my car because he was in the middle of traffic and I was going fast. And they're like, well, were you speeding? And he's like, yeah, I was speeding. I was doing all kinds of crazy shit. I was drinking. I was speeding. I was driving. I had one hand. I had a Tesla and auto drive, whatever. And then sure, I smacked into this retard that was playing in the middle of the road doing dumb shit. That's how I look at that scenario. So sure, the guy who did illegal shit did some stuff wrong and he's going to have to get punished, unless the Dems help him out. But also the retard that was playing in the road probably deserved to get hit by a car. And that's how I look at the people that were like, I was just getting 20% for them to borrow my money. And oh, really? What were they doing with your money? And they're like, investing. Okay. So yeah, this is it. This is the level that we're looking at. If we break down from here, obviously we retest the lows. This doesn't look good though. It basically just looks like a breakdown from a head and shoulders. Reinforcing of the neckline right here. Back test of the breakdown. Back test of the breakdown. If we come back down here one more time, we are looking at this macro. The Adam, the Eve, the meltdown. You could call that the eve of Armageddon if we break down from this shit. So yeah, that's it. That's it for the cryptos. So obviously crypto looks good. It looks healthy. Not quite as strong as the Dow Jones, but there's definitely some potential there. Definitely some potential. About to jump in the chat. Make sure you sound off. William says, I found your channel again. Hey, good to see you, man. I'm still here doing the same thing. Hex Evolve says, hello. William says, this hits close to home. I'm in 10K in on a sub $10 million market cap coin. I'm in 10K in on a sub 10 million. Oh yeah, right. So you're like a substantial owner of someone's crypto Ponzi scheme. Yeah, that sucks, man. I'm sorry to hear that. Hexevolve says, GBDC is a bargain buy at 42% below the current value. It is. Hexevolve, I completely agree with you. GBDC is going to be the most obvious arbitrage trade ever. Or if it returns back to fair value. Or it's complete trash. No money will ever flow into it. And it will slowly just eat away 2% per year until it's worth absolutely nothing. And the gap will just continue to get bigger because it's complete trash. I mean, they basically set up a giant Ponzi scheme. Like the whole, people keep talking about like the box analogy. Okay. And just imagine, right? If I like sold, like stock or whatever. And every time you bought this stock, like I bought the actual underlying. So let's just say instead of Bitcoin, we did this with gold. Okay. So we take this box, or let's call it a safe, so we can keep the money safe, the gold safe. Okay. So everybody who wants to invest in this box of gold with me and speculate on the price of gold in their retirement plan or whatever. Sure, okay. It's a one-way street though, all right? Gold only ever goes into the box. We don't never sell it under any circumstances. So we're just locking up part of the supply of gold. So that helps to push gold's price to the upside, right? Sure. So all these people put all their money in, we take their money, and then we go out and buy a bunch of gold, and then we put it in this box, okay? And no gold ever leaves this box, ever. Under any circumstances, we never sell any gold. With one tiny little caveat, okay? We'll get to that in a second. So then what happens is, if there's all this gold locked up in it and all this money that went into it, why is there a disparity between what it should be worth, which is, you know, spot equivalent to the gold that's inside, and the actual price of it? Well, it's because the value dropped down, but the same amount of money still went into it. So basically, as people continue trying to arb this difference, this discount, they continue buying into it, but all they're doing is buying somebody else's bags. None of the gold is ever going out. The gap is never getting closed. And why isn't the gap getting closed? Well, because over time, all this box does is destroy value. Like in your mind, you think, oh, it's helping out this underlying asset because they're buying it and then they're locking it away. So it removes supply from the market. And while it's trading at a discount, I can buy it. And then when it goes back to fair value, I'll arb the difference and I'll make money. Why isn't it going back to fair value? We just have to wait longer, I guess, right? Well, how do you think all of these exchanges blew up? They were all trying to arb the GBDC trade. I mean, if you don't believe me, look into it. Okay, I promise you, the entire reason crypto melted up and melted down, I promise you, I can say with 100% certainty, I can say with 99.9% certainty, because nothing's for sure, that the entire reason all of these exchanges, all of these different hedge funds, all of these things blew up is because all these people thought they were smart and they were going to arbitrage the difference. I promise you that. And the truth is, it's probably never going to return back to fair value. Probably never. It's probably always going to be trading at a discount. And remember we said with one tiny little caveat about gold never coming out of the box? Oh, there is one little thing though. The fees. The 2% fees. Okay? So just think about that. Every year that goes by, 2% comes out of this thing. So if the fund doesn't get at least 2% bigger, it's getting smaller every year. So if you look at the actual fund, the chart goes up and then it just goes sideways and then it just starts going down slowly over time. And it will do that literally forever until something changes. And you're like, well, what's going to change? What does it have to? Nothing. People buy it to try to arb the difference, to bump the price back. I mean, why isn't it going back up now then? Why aren't people just pouring money into GBDC? Because it's done. It's blown up. In my opinion. If you ask me what GBDC looks like 25 years from now, it probably looks exactly the same as it does right now. And then just minus 2% every year until it's eventually like trending at or around zero. That's my honest opinion. And the whole idea that they're never going to sell any of this Bitcoin, you're like, no, not technically. They're not technically going to sell any of it when money comes out of it or whatever, but it's going to drive down the actual price of it, even though the underlying's worth more. And then every year they're going to just take 2% out until there's nothing left in the box. So the idea of the one-way box, sure, it sounds good on paper. Sure, it sounds good when you're arbing the difference. But then once it flips, you're fucked. And that's exactly what blew up crypto. And again, 99.9% certainty. The more we look into it, the more we find out over time, we will find out that the actual culprit that destroyed this bull run and melted down all this and lost everybody's money was GBDC. And the truth is, had they been ever able to convert into an ETF, this probably could have been avoided. But now, there's no, I mean, if it converts into an ETF now, it's going to be a fucking disaster. So it's basically a dead asset, in my opinion. So there's no reason for anybody to ever invest into it. So it's probably just going to continue trending towards zero. And then other ETFs will just eventually pop up in the United States. But in my opinion, Grayscale, the idea of Grayscale, the whole Bitcoin trust, the whole like safe way to invest in Bitcoin, giant scheme, scam, whatever, same thing. Hexevolve says, well, at least with proof of stake, we get lower fees. What, wait? Alex Becker told me to buy it. I don't know who that is. I'm sorry, man. I mean, I don't really know. I obviously don't follow a lot of other people in the crypto slash investing space on YouTube and stuff like that, because most of them are fucking morons and have literally no idea what they're doing. They're like, I was a nurse 3 months ago, and now I'll explain to you how to invest in cryptocurrencies. All right, well, I'm going to go ahead and wrap it up there. So going into the weekend, guys, obviously, it's been a long time since we saw any actual moves in crypto over the weekend, so I wouldn't get excited. Obviously, the 4-hour is hanging on for now. As long as the 4-hour on Bitcoin 821 stays bull crossed, it looks okay, and we'd likely get that pushback up to like 17.6. We didn't quite get to my target for the pullback and a re-entry for that next leg up. I'm looking for an entry off the 4-hour time frame, or technically off of like the 1-hour 200s for a back test of like 16. I don't know, roughly like 16.6. So we didn't quite get there. We missed it by a couple $100, but I think we will. It looks like we're basically just correcting sideways right now. And then, I'm trying to basically take that move up to like 17.5 or something like that. So not a big move, but we'll see if we get there. The 4-hour still looks okay as long as it's bull cross, but I mean, we've got to be real careful in these markets. They're still not looking particularly great unless you're the Dow Jones, in which case, not bad at all. DXY still very weak. TNX, a little bounce, but still very weak. I mean, the truth is, it could be done. It could be over. It could be ready for new all-time highs on the Dow Jones by end of year. So, would not rule it out. Now, NASDAQ and stuff still down like 30%. Probably stays down. Dow Jones, real companies making money. NASDAQ, fantasy companies bleeding money. S&P, somewhere in between. But yeah, we'll go ahead and wrap it up there. Everybody have a great weekend. I'll catch you guys on Sunday for the Sunday evening market look ahead, 8 p.m. Eastern Standard Time, or Wednesday for the midweek market update, 8 p.m. as well. But yeah, that's it. Gonna go ahead and wrap it up there. So it is 12:24 p.m. on Friday, 11/2/2022, and I am Crypto Trend Trader. About to get out of here. Obviously, before we go, none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. Yeah, we'll have that inflation indicator hopefully out here pretty soon as well. So yeah, keep your eye out for that. But that's it for today, Crypto Trend Trader. Everybody have a great weekend, and I'm out of here.